Businesses from the global financial industry have gathered today across both the buy side and the sell side to discuss innovations in EFX technologies. What have we learned and what technologies are shaping the future of how FX trading desks might look? What role does automation play in the direction of your business? Quod Financial is back at TradeTech FX Live for the first time since the pandemic. And today we focus on three key themes: the use of machine learning for better intelligence, the rise of automated trading, and enhancing trading workflows by embracing new execution technologies.
The future is much more interoperability between applications. I think, we've seen that in sort of our connections out to sort of platforms and stuff. I think that's going to come much more to the desktop. I think what we're really looking for is almost like getting components onto the desktops, the best tool for the best job coming on the go, but then being able to sort of have those in there operate a little bit more effectively for the trader so they can build their desktops, interact between their components, find your best TCA provider, have a TCA application, maybe doing pre-trade analytics. When I click in my order management system, immediately I can sort of see some of that analytics in the TCA.
Yeah, what is very interesting in FX is that it's an asset class who exists for a very long time but continue to reinvent itself. There's still a lot of innovation in FX in terms of technology, in terms of latency, in terms of algorithmic trading, in terms of crypto assets, in terms of digital ledger technology, payments. We see those worlds are continuing to evolve quite rapidly and bright future indeed. Innovation is a trial and fail. What we learn at ING is to be able to experiment a lot, and we don't know where the future will be, but we see some trends. So you have to make some bets, and you have to look at different ways that innovation will bring you forward.
Well, the FX landscape has changed quite a lot over the last even 3 years, especially in the pandemic, where we actually were automating a lot more of our FX electronic flow. So I generally see a trend for trying to automate as much FX transaction trades as possible. We currently execute pretty much 98% of our trades electronically without high touch, as we would call it. So very low touch interaction from the desk. We have our own internal algos. They're very much data driven from the data we collect. And I very much see more of the bigger houses taking up execution via the algos.
So we've seen a significant trend towards more passive trading as opposed to more aggressive taking. We've seen clients who want to be more benign in the market, who want to post orders and are willing to be a little bit more patient with their hedging and wait.
One huge factor that's coming is further regulation, and I think the market isn't really ready for that. I feel that over the next few years, optimization will become a huge part, and this will have a knock-on effect to liquidity, to credit provision, as well as driving new technology and new workflows and new requirements. So I think there's going to be a lot more focus on it because the regulation is going to become a lot more severe for the FX, particularly with the advent of SACCR and the effect that that has on risk-weighted assets.
The future of FX, I think, we're going to continue to see more automation, more aggregation, but actually I think in some cases we're seeing over-aggregation. And I think with trade cost analysis and more data that we've been talking about this morning already, we're going to see people reducing the number of liquidity providers and eliminating the liquidity providers that either are giving good fill ratios or the returns on those liquidity providers are not sufficient. Traditionally, if people are trading their foreign exchange as a hedge for another asset class, I think in more and more cases, firms are internalizing that risk. We've seen some non-bank market makers looking at, for example, their ETF book with a foreign exchange hedge, where historically they've maybe hedged that directly. They now internalize that. They use that risk as an axe to start market making. And I think that could be a common theme in terms of people trading FX as a secondary product of their core book.
So I think overall, FX is for an overhaul. So in the way how we actually deal with it and how we actually trade into it, the market is actually changing in infrastructure in terms of it goes from actually guided prices, actually buffered prices, millisecond prices, to actually microsecond prices, real-time prices, anything which actually comes into there. So technology needs to adapt into there. So newer systems are coming up to actually absorb that number of massive updates which are coming into the systems, able to handle it, able to process it, understand it, make your price discovery into it, make your price creation and distribute it again. So it takes actually a whole new world in the way how we actually operate in there and actually move forward. So I think in that perspective, we're on the breach of a new area in the way how FX is actually traded. The whole way how you actually do your execution, technology is there to help you. It's not to overtake you in what you're doing. It's to help you to get a maximum efficiency in the way how you actually really work forward and in the way how you want to do your execution.
With emerging markets, there's a lot of exciting developments because they're playing catch up across the entire, what's been happening in the ecosystem for many years now. So that's something that we have a very close eye on in terms of trying to democratize how those markets evolve. So the future, or the exciting bit of the future, in my view, is how the rest of the world catches up to what's been happening in the developed markets.
The main sort of things changing in terms of FX industry, I think, will be tech-driven. So further electronification. We've seen an enormous amount of electrification in the FX space over the last 10 years. We've still got real money, kind of old school voice traders still existing out there. I think that's going to get eradicated over the sort of next couple of years with more and more places automating their trade workflows in FX area specifically. I think where you would see the biggest shift in terms of automation, it's once the asset managers and the real money will start realizing that they can achieve cheaper cost of execution than the current risk transfer price they're paying to voice traders, because they'll overall, over a long run, they're going to end up saving quite a lot of money on a spread.
I think the changes that we've seen in the FX market have really been the drive to effectively use technology across all aspects of the trading stack. That's looking at it from a multi-asset perspective, that's integrating with TCA, and obviously the big topic of conversation that we've seen here is the use of machine learning across all of the architecture. I think the real innovation that's happening at the moment is creating multiple integration points for these real-time workflows, all easy to assimilate, all as low cost as possible, and just unifying this data universe for this real-time automation, which again then feeds back into AI, it feeds back into algos, it feeds into the general approach of machine learning. So a lot of the innovation that we see happening at the moment is integrating open source tools for communication between different platforms.